Welcome to the Morning Download Podcast, your go-to resource for personal finance, economics, and market insights. In just 8 minutes a day, we provide valuable information to help you make better money decisions. Don't forget to sign up for our free newsletter at https://w.morningdownload.com. Subscribe. Let's dive right in. In today's episode, we'll cover the Fed announcing rate cuts for 2024, the surge in stocks, caution on early Social Security payments, SpaceX's valuation surpassing Boeing and Verizon, the rise in mortgage refinance demand, the Dow hitting a new high, changes in stock values for Pfizer and Etsy, the implications of claiming Social Security benefits early, and the importance of viewing shares as owning a portion of a company.
Guess what? The Federal Reserve has made it official. Rate cuts are coming our way in 2024. For the third time in a row, they've decided to keep the primary interest rate unchanged, setting the stage for multiple reductions in the years to come. Right now, they're planning to maintain the benchmark overnight borrowing rate within the range of 25% to 5%. But here's the thing. While the Fed has announced 3 rate cuts for next year, it's actually a bit lower than what the market was expecting. Don't get too worried though, because the market is still predicting a whopping one. 5 percentage points in reductions for next year, double the pace that the Fed originally indicated. This move will mark the end of a cycle where we've seen 11 rate hikes, which has taken the rate to its highest level in 22 years. But what's in store for us beyond 2024? Well, there's a chance we might see even more rate cuts in 2025, possibly bringing the rate down to somewhere between 2% and 25%. Now let's talk about some global hits making waves in the news. Can you believe that SpaceX's valuation has soared to a massive $180 billion? That's even higher than some big names like Boeing and Verizon. And in the world of mortgages, refinance demand has jumped by a whopping 19% after rates hit their lowest level since July. Lastly, the Fed has now lowered its inflation forecast for 2024, with core PCE, that's personal consumption expenditures, expected to fall to 4%. The Dow Jones Industrial Average reached a new high yesterday, closing at a whopping 37,090, 24 points. That's a first, surpassing the previous record set back in January 2022, when it was just under $37,000. Now, you might be wondering why such a surge happened. Well, one factor that boosted confidence in stocks was the central rate predicting 3 rate cuts for next year. This news got investors excited and led to this new milestone. However, it's important to note that not every company saw their stocks skyrocket. There were a few that experienced a drop in their share prices. For example, Pfizer, the drug maker, saw its shares fall after forecasting lower revenue and profit for 2024 compared to what Wall Street expected. Another company that saw a dip was Etsy. They recently updated their fourth quarter guidance, expecting a higher adjusted EBITDA margin between 27% and 28%. This announcement, along with their decision to lay off 11% of their workforce, caused their stocks to decline by 16%. It goes to show that even in a market high, not all stocks are celebrating equally. Let's talk about why it may not be a great idea to take early Social Security payments. I know it can be tempting, but there are some things you should consider. First off, the amount you receive from Social Security depends on factors like how much you've contributed over the years and when you decide to start collecting. The best option is to wait until the designated age to claim benefits so you can get your full amount. But some folks choose to take payments as early as age 62 for various reasons. However, early payments come with their downsides. If you claim before the full retirement age, you'll receive reduced benefits for the rest of your life. For example, if you were born in the 1960s or later, you'd get 30% less each month if you claim at 62 instead of waiting for the full retirement age. Another thing to consider is the impact of living adjustment for inflation. Beneficiaries receive adjustments to their benefits to account for rising costs. So, if you wait and claim benefits at a later age, you'll get more money each month. Also, if you earn more than a certain amount, you'll lose money from your benefits. The limit changes each year, but in 2023, it's around $21,240. For every $2 you earn above the limit, $1 is deducted from your benefits. It could mean less spending money until you reach full retirement age, but here's some good news. If you regret taking early benefits, there is an option to reverse the situation. It's called a withdrawal. You can cancel your application within 12 months of becoming entitled to retirement benefits. Just keep in mind that you'll have to repay the benefits you received, including any money that was withheld for Medicare premiums. So take your time, weigh your options, and make the decision that's right for you. I've got a great personal finance quote for you today. It's from the legendary investor Peter Lynch. So here it goes. Although it's easy to forget sometimes, a share is not a lottery ticket. It's part ownership of a business. You know, it's pretty common for people to think of investing in stocks like playing the lottery. They hope to strike it rich overnight and make a fortune in no time. But Peter Lynch reminds us that investing in stocks is actually quite different. When you buy a share, you're essentially buying a piece of a company. It's like becoming a part owner of that business. And that's significant because, as an owner, you have a stake in its success. Unlike a lottery ticket where you have no control over the outcome, investing in stocks means you can benefit from the company's growth and profits. You have the potential to earn dividends and see the value of your investment increase over time. So the next time you're considering investing in stocks, remember Peter Lynch's wise words? It's not about luck or chance. It's about being a part of something bigger and building wealth through the success of the businesses you believe in.
In this episode, we covered the Fed's rate cuts, soaring stocks, caution on early Social Security payments, SpaceX valuation surpassing Boeing and Verizon, rising mortgage refinance demand, predictions of core PCE falling, the Dow hitting a new high, stock decreases for Pfizer and Etsy, implications of claiming Social Security benefits early, and the importance of seeing shares as owning a portion of a company. Thanks for tuning into the Morning Download, your go-to podcast for personal finance, economics, and market insights in just 8 minutes a day. Don't forget to subscribe for more helpful content and sign up for our free newsletter at morningdownload.com/subscribe.